If I were to start crypto again with all the knowledge that I've gained over the last few years, I'd probably do it differently because crypto punishes those that are unprepared. And it doesn't matter if you got wrecked in this last cycle or if you lost everything and you want to start over, or if you're just someone that's interested in starting an investment in crypto. I would do it this way. Number one, I would pause. I think a lot of us go back or go into the market because of excitement, because we see the potential for making money, because we see the potential for increasing our income, for feeling that excitement of winning in something. I think that's one of the main drivers that we see. We feel the emotions that are being transmitted by other people, the fear of missing out. And I think that's one of the reasons that many of us either start in crypto or return to crypto even after getting destroyed because of the market. And one of the things, the first thing that I would do is really check my emotions. Like they say, check your emotions at the door, right before you go into the crypto market. You want to be even keel. You want to think about why you're going into the market. You want to think about your position that you want to invest. I would do my due diligence. I would check out the wallets. If you don't know about wallets, decentralized wallets, I recommend anything that's with Coinbase, because that's the one that I started with. It was fairly easy to use, and it was fairly easy to start with. So there's many out there, but I would check those out. And primarily, the first thing that I would do as well would be to really think about how much money am I willing to invest to start. Is it $100? Is it $1,000? Is it $10,000? And I would step back and really do a financial analysis of where I am, right? You got to think about where you are in terms of your finances, in terms of whether you have a mortgage, whether you have car payments, whether you have student loans, whatever it is that you have in terms of debt or in terms of liabilities, like they say. I would really think about that, right? Because you have to invest money that you are willing to lose. And I'm not saying that you're completely gambling, because that's not why I'm here. Initially, maybe, but that's not why we're all here. We want to make sure that your investment is sound, right? That you're comfortable going at night to bed and leaving that investment in a project that might go away, right? I'm not saying that all projects do that, but there's always the potential for a project or for an investment or for a company to lose value overnight, especially in crypto. So that's the first thing that I would do. The second thing is that I would learn about all the tokenomics, all the technical aspects, maybe not become a guru when it comes to technical analysis, but I would definitely learn how to read a chart, right? How to read moving averages, how to use indicators to really learn about where a project is in terms of the numbers. I would do my research in terms of a project. What's the market cap? Learn about that. I would also learn about what is going on with the project in terms of the developers, right? Is the company or is the developer working on the project and delivering on the things that the project is set to deliver? Most projects are going to have a roadmap, the good ones at least. And so I would look at that roadmap, look at what they're planning to do in the next quarter, in the next 6 months, in the next year, and what they're looking at long term. You don't want to go blind. Always go into X or the community and find out what the community is like. Find out where it is. Find out the people that are leading. Just take a look at how serious the project is in its entirety. And I think those two things are really important. And finally, really think about why you're in the market, right? Think about why you're in it and what do you want to get out of the market. Obviously, we all want to get a lot of money out of the market, or at least some money, right? We want to maybe duplicate our money, maybe make it, 3x, 4x, whatever it is that your goal is. Think about what you want to get out of the market. But think about it this way. Think about it long term. Don't come into the market thinking that you're gonna double your money overnight, which could happen, right? A lot of people do that. But in the end, I think that the market will reward those investors that survive, right? So whether it's a bad market, a red market, whether everything's crashing or everything's going up in terms of green candles and green charts and euphoria, you really have to think about how you are going to be here long term. If you have a long term mentality, it's more likely that you're going to survive and that you're going to make money. Those that are here for a quick return, those that are here for quick gains, for a quick, round trip, that's not gonna happen, or that's not gonna be very helpful for the most part to your portfolio. And I think those three things are probably the most important things. Talk to people, find a mentor as well. Find somebody that you can talk to, somebody that you can trust. If you have a friend, like a personal friend in real life that you can talk to, that you can ask questions, that they are already invested in projects, or that they have already some experience in the market, talk to them. Bounce ideas, right? Keep that dialogue going on. Don't close yourself to recommendations. Obviously, you always make your own choices. You always do your own due diligence, but it's always good to bounce ideas of somebody off of somebody that has done it before. So it's really important, guys, that you really do your homework. It's really important that you do your due diligence, that you check your emotions, that you think about your risk management, how much are you willing to risk, and really learn about the things that are going on in the market, not only internally in terms of communities, in terms of projects, roadmaps, and all that, but also look at what's going on externally, because a lot of our emotions are influenced by the things that are happening externally. If you're starting from scratch, or if you are starting again because you got wrecked, because you got liquidated, it can be done. I did it. A lot of people have done it, and you can do it. And I believe in you, right? But you have to put in the work. All right, guys, that's it for today. Hopefully you're doing great, and hopefully you enjoyed this video. If you have a strategy for starting again or for starting your investments, leave it in the comments below. And if you like this video, if you enjoyed this conversation, come back whenever you want. I'm always going to be here delivering some videos. It's Beto again on base. I'll talk to you soon.